Hello, my name is Pastor Derek Lane, and I live and pastor here in the Othello community. I'm vaccinated because I know how illness can hurt the community. As a grandfather, I am boosted to help protect my 3.5-year-old granddaughter who can't be. I don't want to see members of my community die needlessly. And as a pastor, I've had funerals for those who caught COVID, but none from taking the vaccine. If you have questions, need resources, or want to make an appointment, visit kingcounty.gov/vaccine.
The beat of the Fox with nastiness is back on K-Fox Night Beat.
Yo, what's the deal? It's the legendary Hall of Fame DJ Mixmaster Ice from UTFO.
What's up? Who you thought this is? This is Sir Mix-a-Lot.
And this is Terry Lewis.
And I'm Grand Mixer GMS.
What's up, y'all? This is DJ Third Degree.
This is JJ Hudson from the High Children.
Sunday nights from 9 p.m. to 11 p.m. Pacific Standard Time. It's K-Fox Night Beat with DJ Nastiness.
Bringing back the memories.
Bringing back the memories.
Bringing Seattle's
Bringing Seattle's hottest music. Rainier Avenue Radio .world.
That's my noise.
Hey.
Celebrate Black History Month at the Called Conscience Black History Month Museum, formerly Lombard City Theater, 4916 Rainier Avenue South. Called to Conscience Black History Month Museum features exhibits and installations. It's a guided tour. Installations include the Seattle Black Panther Party, the Black Heritage Society of Washington, the Rainier Cinema Black Movie, Jimi Hendrix Family Installation, Seattle Griot Project, BlackPass.org, the Hartsfield Family Slave, the Seattle Black Firefighter, an exhibit of the Seattle Black Elected Officials, Coma's Buffalo Soldiers Museum, Keith Flywright Williams Photography Collection, the Royal Esquires, a Negro League baseball display featuring the Seattle Steel. Of course, there will be your community keepsake and memorabilia. Tuesdays through Sundays from 11 a.m. to 7 p.m. There will be no other location where you can celebrate the achievements and the achievers of the Pacific Northwest and Seattle while recognizing the Black excellence that shines today. For more information, visit RainierAvenueRadio.world or call 206-290-9685.
Would you like to see when your favorite Rainier Avenue Radio show comes on? Check out our show schedule, updated weekly at RainierAvenueRadio.world.
Welcome to Real Estate and Money, a half-hour program on RainierAvenueRadio.world designed to help you whether you're a buyer, seller, investor, or renter in real estate. Your hosts are two local professionals who will escort you on your journey. Violeta Strash, who has years of media advertising and marketing experience and brings this extensive knowledge to John L. Scott Real Estate and all our clients. And Tina Lombard, who is a mortgage loan originator with guaranteed rate affinity with over 28 years of experience. And now here's Violeta and Tina.
Hello, everyone. How are you? Yes. Can you hear me, V? Can't hear you. I don't think we can hear you. But anyways, welcome everyone. I think V, I think we can't hear you, but welcome to the show. This is Real Estate and Money with Violeta Strash of John L. Scott, and I'm Tina Lombard with Bank of England. So V, are you having a hard time with your microphone, or Daniel, can you help her with that? But anyways, welcome to the show until she gets situated here. Real quick, we just want to say hello. And today we're going to be talking about a very, very important subject. We're going to be talking about how to do loans that are alternative to those of conventional and FHA and those type of loans. We're going to be talking about individual tax identification number loans today, which are commonly known as ITIN loans. So for those people who are out there who do not have a Social Security number, but they're here in the United States and they've applied for an individual tax identification number until the Social Security number becomes a thing or becomes valid, we can still get you a home. But before we do that, we want to do some updates. Violeta, when she gets going, she's going to be talking to you about the real estate updates in the market. But until then, let me go ahead and talk about the mortgage rates. So everybody, hold on to your seats. The mortgage rates are getting a little goofy here. Here we go. The mortgage rates for national average across the country. So you see an APR, an average 30-year fixed rate APR of 7.1%. The interest rate starting at 6.976. So as you can see, the interest rates are moving up. Your 20-year rate is not too much better, but you can still get a better rate at a 20-year fixed rate, and that's a 6.33 with an APR of 6.490. 15-year is still at 5.836. So that's pretty good. Now, if you want to do a 10-year fixed rate, that's at 5.78 on a national average, an APR of 5.988. And now if we go down to the 5/1 ARMs, you see the 5/1 ARMs are starting at 6% with an APR of 6.976. So the adjustable rates right now are a little confused, and they're not really making a big difference. You can see the rate is a lot lower, but the APR is almost as high as a 30-year fix. So why should you fix something for 5 years? I don't know. So anyways, that's what the rates are. They're still going up. So Daniel, can you scroll down to where it starts showing the actual chart? So this is very interesting. Thank you. Right there, as you can see, that 30-year fixed, it's going up, it's going down. Right now, February 28th, it's up to 7.1. And that is a 30-year APR of a 30-year fixed rate. So rates aren't going down. Now, as we said before, rates don't go straight up like this. They actually trend and they go upwards. So sometimes you'll be able to catch something in the trough where it goes down a little bit, then it goes back up. So last week, it did blip down just a little bit, and a lot of people got excited. So, they kind of held out thinking that the rates are going to go down lower. They actually went up. So please take a good look at this. If you're trying to buy a house, you want to still go ahead and buy a house. Don't worry about the rates, because right now, whatever you lock may be better than it is in 2 months from now. So anyways, thank you so much. Thank you so much, Daniel, for that. Sophia, are you on? Not yet. Okay. Forget that. Okay. It's not on just yet. Okay. Can you call from your cell phone? Can you get on your cell phone? Okay, she's going to try from her cell phone. So before she gets on, let's go ahead and talk a little about these alternative loans. So there are loans out there, such as the ITIN loan, the tax identification number loans. Now, these loans are in a different market completely. We've got rates in those markets that go as low as 8.5% to maybe 10.5%. Now, those rates are a little bit higher. However, there is no mortgage insurance with those rates, and they are something different. Now, here we go. We have an ITIN loan here. Some of the qualifications of an ITIN loan, we can actually go up to 90% on an ITIN loan, and that's with only 10% down. So a lot of these loans, you can take somebody with a credit score, a mid-score of 660, 670, 700, 720, or sometimes people with ITIN loans don't have any credit report numbers. So we actually don't look at a credit score. Now, this particular program here, for the 90% loan to value with only 10% down, it does require a 720 mid-score, okay, and at least 2 trades. So people with Social Security numbers, of course, have their credit report. People with ITIN numbers also use their ITIN number as a Social Security number, and we're able to pull a credit score. Now, sometimes people are just getting started. They have maybe just 1 trade line on there. Well, we can't really use that. We need at least 2 trade lines. And that could be like from Macy's or JCPenney's, or it could be a car card or something like that. But we need something that reports in your credit report. A lot of times your verification of rent is also an alternative piece of credit that you can use as a trade line. So at least 720 mid-score for that 10% down program, and at least 2 trade lines. You need at least 12 months worth of rental history. So if you only have 3 months of renting somewhere, and we can prove only 3 months of that, that's not going to be enough. But if you have been renting in any number of places for 12 consecutive months, and we can prove the rent, that's also what we're going to need for this program. Also here, we've got a payment shock of $200. So if you're paying $3,000 a month, we want to make sure that we don't go up to, or 200%, I'm sorry. If you're paying, let's say $2,000 a month, we want to make sure that if you went to $4,000 a month, that won't be too much for you. So we do look at payment shock, and it cannot exceed 200%. All right. 6 months reserves. So we want to make sure that you've got 6 months of a mortgage payment. So let's say we qualify you for a loan at $500,000. Let's say the payments are $3,500 a month. We want to make sure if you took $3,500 and you times that by 6, that's somewhere around $20,000, that you have 6 months of that mortgage payment sitting in a savings account. So you have to put the 10% down, plus at least have 6 months worth of savings for that particular program. Your debt to income ratio cannot exceed 43%. So if we take all the income in the household that is applying for the loan, we want to make sure that that income does not exceed 43%, and that includes your car loan, your credit cards, all other loans, and then also your mortgage payment. So we're limited on how much we can give you, and it's 43% of your income. So that's how you qualify for a 10% down I-10 loan. So thank you, Daniel. So how are we doing with V?
Can you hear me?
There you go. Oh, turn the television, turn your laptop off.
All right. Sorry.
Although you do sound very majestic and divine that way. But, there you go.
Oh, okay. Is that better? I don't have my picture behind me.
That's okay. You still look awesome. So yeah. So V, do you have a mortgage? Do you have some housing updates?
Oh my God! Now I can barely hear you guys. I've turned it up as high as I can. Okay. Okay. Can you hear me though?
Yes. Mm-hmm.
All right. So you want me to do my updates? My housing update?
Yes. Mm-hmm.
Okay. I think that's a yes. I'm gonna assume it's a yes. So King County. The last couple weeks, I took a look at what was happening in the market for King County. We had 409 homes in the last couple weeks go active listings, sold 575. So still pretty crazy out there. A lot of people in the market, and it's just the start of the spring market, and it's going to escalate from here. But those sold homes sold at an average price of $1,017,000. Last year, same time period, $1,153,000. So there was a difference of 13%. Year to year, we had higher amounts last year. So there are things that could be negotiable right now. So let's take a look at that. And then for King County, January, days on the market. This year, 17 days on the market. Last year was 13 days, so a difference of 4 days on the market. Percent of the list price. Last year, it was 107.3% of the list price. This year, it went down 4.5% to 102.8% of the list price. Showings per listing, we had 19 showings last year versus 10 this year, 10% difference. So that means it takes people less time to be out there closing on or going mutual on deals right now. And then showings to get to listing, 28 last year, 19 this year. And then we go on to Pierce County. We have 214 homes in our listing inventory and 325 homes sold, an average price of $577,000. Last year, same time, $615,000. So 6.5% difference year to year, dropping this year. And then we're looking at the residential movement in Pierce County for days on the market. This year, 20 days on the market, 17 days last year. So difference of 3 days. Percent of the list price, 103.9% last year, 101.9. So, less than 8% difference. And then showings per listing. This year, 7 showings per listing, and last year it's more like 12 showings per listing. And then showings to pending, we're looking at 15 this year versus 18 last year. And then last but not least, of course, is Snohomish County. And let me go back up to Snohomish County. We're looking at 157 homes are actively on the market. In the last 2 weeks, 265 homes have sold with an average price of $743,000 versus a 12% difference of $841,000 last year. And days on the market, we're looking at 11 days last year versus 19 this year. Percent of the list price, 106.2% last year versus 103.2%, so down a little bit. Showings per listing, 17 last year and 9 this year. And then the last figure here, showings to pending, 17 last year versus 12 this year. So a little quicker getting the turnaround to go to mutual, and prices are a little bit more aggressive for the buyers to secure something this year.
Mm-hmm.
Still very active market and just getting going. And, the reason why we're talking about I-10s today, you can bring us both in, Daniel. The reason why we're talking about this I-10 situation is because I have a number of them right now that I've talked to Tina about. And with the new program, the loan program that Tina has, at 10%, that's, it's looking very attractive versus the 20 to 25%, right, Tina?
Yes. I mean, so before we go to halftime, we really want to talk about that, because in the past, people with I-10 loans had to put 20 to 25% down. So if you're looking at a $700,000 home, that's $140,000 down. That's a chunk of money. And now it's more like 70. So this happened like 3 years ago. There was a 10% program, then that quickly went away, but they're back. So when we come back after the break, we're going to talk more about that. Mm-hmm.
Tune in to Real Estate and Money every Tuesday afternoon from 2:30 to 3 here on Rainier Avenue Radio.world. Join your hosts, Violeta Strash with John L. Scott Kent North and Tina Lombard with Guaranteed Rate Affinity. They'll help you navigate the waters of our volatile real estate market and offer you some guidance on how to make your hard-earned money work to make your dreams come true. Learn about current trends, get tips on financial matters, and have fun, interactive discussions about your home inside and out. That's Real Estate and Money.
Here we go. Okay. So Violet, there's a lot of loans out there. Yeah. There's a lot of loans out there this last year that have been, did not come into fruition because the rates started going up. So before, there was a lot of people with conventional loans or FHA loans where they had the classic, 5% down, 10% down, and they got a loan, and they were usually in front of everybody else. Now that the interest rates are higher, they're going to the 7s. A lot of people with conventional loans and FHA, they're getting kind of pouty. They're like, I'm not going to buy a house at 7%. They're just getting all, entitled and stuff, which is okay. I understand that.
Yeah.
However, you've got people, the banks are saying, okay, we have got to make money. We have got to give people some loans. We have got to keep the industry going and keep housing going. So mortgage companies have become very inventive.
Yes.
In last year or year gone by where the rates were 2.5, 2.7, a lot of the banks were just picking low-hanging fruit. People with 800 scores, they have 30% equity. They're gonna refinance them from 8% down to 2. Okay, and so a lot of people who needed more help, we didn't even have time for them. No, but lenders didn't have time for them because there's just so many loans that were low-hanging fruit, so to speak. So now a lot of the conventional loans and FHA loans, people are getting more particular. They don't like the interest rates. They're not buying. So these undiscovered market or markets that weren't serviced before are coming to the forefront. And one of those markets is the tax identification number markets. So these clients typically have a lot of cash. They've got great credit because they haven't spoiled or ruined their credit.
Yeah.
A lot of them are self-employed because nobody wants to hire them without a social security number. Because they have been self-employed, because they do keep all their finances and everything up to par so they can have a citizenship. You're finding clients who've got large sums of money. They got $100,000, $200,000, $300,000 cash, because they never had, people don't give them loans as easily without a social security number. So they have cash. Now, in the past, a lot of lenders were saying, hey, we need 20% to put down. And of course, when you take 20% down of a $600,000 loan, that's $120,000. It's kind of a lot of down payment down.
Yeah.
So banks now have been scrambling, and now these clients represent a large part of the community, a large part of the people who can qualify for loans. So these loans now are coming in like crazy. Typically in the past, there were only 30-year mortgages, 20% down. But now we've got a program where there's up to only 10% down. And there's some programs where there's a 7-1 arm. So it's not a 30-year fix, it's a 7-1 arm. So the interest rates are much more lucrative and they're much, much better. And the thing is, a lot of the conventional loans, if you put 3% down or 5% or 10 or up to 20% down, you're going to have mortgage insurance. So with these I-10 loans, even though the interest rates are higher, there is no mortgage insurance. The down payment takes care of that, and the interest rate takes care of that. So you can see somebody with a 7.5 conventional, paying mortgage insurance. If you put against somebody who's paying an I-10 at 8.5 with no mortgage insurance, you're not too far off in payments. So it's a wonderful time if you have somebody with a tax identification number. It's a wonderful time for you to get in the market and buy that house. And the beauty of it, V, is, you can get in now, get that house, just like your report has been saying, houses have been appreciating in the Washington area. They have been appreciating. And so a lot of clients who have I-10, they're going to be getting a Social Security number pretty soon. So if you get that home now with your I-10, a year or two later when your Social Security comes through, you can always refinance to a conventional loan if it's better, but at least you can get into that house and stop paying rent. You can start enjoying the benefits of home ownership.
Yes, and what I'm seeing is that while the homes people are wanting are really expensive, the interest rate is still high. The payments, you got to take a look. Tina will take a look at the payments, the monthly payments that you need to pay, and make sure that you're able to swallow that, because it might be a little higher, like she had said, than you're typically used to. But the fact that people are getting something that they own, they've waited for, they have a growing family, and they need to move into a home of their own. And this is a way for people, resident or non-resident aliens, to get a social security number and get into the housing market to purchase a home.
Let me move around a little bit so my flight will turn back on.
Okay. And
okay.
And so, yeah, I had a couple people go through the program recently, and when it was just a matter of 20% down, really. And it's something that's worth buying is like, $600,000. And if you caught the beginning of the show, I showed a picture of a house on my background that is in between the $300,000 and $400,000 range. It's a 3-bedroom, 2-bath home, and that is certainly very affordable for people to get into.
Yes. And here's the thing. When you're renting, you're not enjoying any mortgage interest payments. You have no tax write-offs as far as your housing is concerned. So you've got some people here who are paying $2,800 a month on rent, yet they're making $400,000 a year. That is insane. Okay. And so you think these people care about interest rate? No, they don't care about interest rate. You think they care about? No, they don't. They want to get a house. They want to have that tax break. Why rent something at $2,800 or $3,000 a month and there is no equity in it? Absolutely no equity. And then you buy a house, maybe it's $800 more a month. But now you've got equity. You're building a house. You've got a tax write-off, especially if you're making like $300,000 or $400,000 a year. You have now no tax write-off. So this is an underserved market. And so realtors out there, if you've got somebody with an I-10 loan, you need to get them into this program. And for you who are out there who've got an I-10 and you have been renting and you're making good money, and your house is your apartment is too small, you need to call Violeta up. You need to get out there and start working to finding a house. So I've got two more flyers there. Daniel, can you show one of them really quick? This is the I-10 loan that we just talked about earlier. And documentation required. We need a government ID. We need either your citizenship ID from Mexico or wherever your country is from, and then your I-10 letter. We need your I-10 letter. Okay. A lot of times we'll need an unexpired passport from your country of origin. Okay, so that's basically what we need. And so I believe there's another one we have there, Daniel. I have another flyer. So I-10 loans, individual tax ID number. So Bank of England here is committed to giving you these I-10 loans. Now, when people say I-10, they think somebody's illegal. They think this is bad. They think it's blah, 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 blah. It's not. The I-10 number is actually given to you by the IRS. And these clients pay taxes and report their taxes. And they have a credit report and everything else. So we're committed here at Bank of England to go ahead and give those type of loans. So it's not illegal. It's nothing crazy. It's nothing that's a scam. It's an actual loan. Okay, and next flyer that we have here, Daniel. Okay, one more. Do I have more? No, I don't have any more flyers. Okay. So in other words, an I-10 loan, a lot of people think I-10, oh, it's bad, it's bad, it's bad. It's not. We've got relatives in the Philippines that come all the time. Okay, and they get loans, so on and so forth. I-10 is not a bad word. It's a way they actually do credit reports. They actually do turn in tax returns at the end of the year. So we do look at tax returns. Do not be scared. Do not be scared that you cannot buy a house. This is something that we can actually do for you. So at least give us a call and find out what you can do.
And again, this 10% down program, that's relatively new, right, Tina?
It's extremely new. It's like 2 weeks new. And what's so nice about it, we do a lot of full documentation loans for I-10 programs. So if somebody is self-employed, so on and so forth, we do a loan. Now, let's say you have somebody that's self-employed and they own a restaurant or they own a landscaping company, and they don't show in their tax returns what they really make, but they have bank statements. We have bank statement I-10 loans where you use your bank statements, deposits from your bank statements to prove your income. A lot of times that is a lot more than you report in your tax returns. So we get more of an income value. We also have DSCR I-10 loans. So DSCR are debt service loans where if somebody wants to buy property for investment purposes. So if you have somebody that has an I-10 loan, they have a house and they're doing fine, but they want to buy some rental property, we actually do loans. If they have a positive cash flow, they have a down payment, we can do those loans. Okay, so I want the message to be loud and clear. We can do full documentation on those with an I-10 number. We can do bank statement loans for self-employed. We also can do DSCR loans for people who want to buy investment properties. So right now, this is a very, very small, beautiful time in history where mortgage companies are saying, we have to lend to somebody. So let's stop just picking the low-hanging fruit. Let's go after some loans that we have passed on before because these people are creditworthy. They have the money. They have the ability to buy the home. So let's start giving these people homes with good rates, good down payments. So this is a small blip in history where people in the past could not do these loans, but now the gates are open.
Yeah, so talk to me. I had somebody come just on Friday, I think they reached out to me. And we went out this weekend, took a look at some homes. Tina even called in this weekend. She works as hard as anybody else, and more than anyone else in that business. I was surprised she was calling my client while I was showing them a house.
Well, you've got like 3 I-10 loans going on.
I know. And then we went yesterday, saw a few more homes, and we're putting an offer on a home just like that. So a weekend.
Well, the thing is, the difference with these clients is that they trust you, they're loyal to you, you give them a good rate, you show them a house, they're like, I want that house, let's go. Some clients in the past and conventional, they're very picky. This person's, I like their shoes. This person calls me back in 2 minutes. This person gave me a half of an eighth lower. I mean, just picky. So you're just throwing something at the wall and hoping that it sticks with some conventional clients in areas that were not serviced in the past. They're loyal. They give you everything. Their credit scores are great. And they're very true to helping you out, and getting the best loan. But other people will shop you like crazy. Am I saying this correctly? Sometimes they'll shop the heck out of you. But, when you have some markets that have not been served in the past, when you give them an approval, they appreciate their approval, and they're going to get a house. They're not here to play games. So, yeah.
And Tina will follow up with, a letter, a pre-approval letter, just to say these people are good buyers. She's going to call them for me, the listing agent for me, to say, hey, these guys are good to go. What do you need? What do we need to do to get this to happen?
And sellers are so happy right now to get that offer letter. They're just like, oh yeah, we got an offer. So sellers are they're right there. So if you're out there and you've been selling the fence, at least give me a try. Let's at least call Violeta up and give us a try. And see if we can get you. So I think we're just about done for the day.
I know, and my arm's getting tired. I've never done this with just my phone.
You got to get a stand.
I know. Well, I moved into another area of the house. I said, it's beautiful. The lighting is good over here. Let's move the screen over here. And that's all I brought with me. My screen, my computer. Thank God my phone was nearby. Sorry, folks, but you'll see a background again. I'm sure Daniel has great backgrounds happening. And Tina always has something going on behind her. And so I bid you farewell.
Yes. So anyways, we'll see you next week. Thank you so much.
Yeah, thank you for joining us today. We'll see you next week, 2:30 on Tuesday. All right?
Bye-bye.
Bye.
You've been listening
Thanks,
to
Daniel.
Real Estate and Money with your hosts, Violeta Strash and Tina Lombard. For more information, call 206-717-4490. That's 206-717-4490. Go to the Rainier Avenue Radio.world website to find the Real Estate and Money schedule Or tune in to our live show every Tuesday afternoon from 2:30 to 3. We will help you find